Okay, so we're diving into Indo Equipment Limited today.
Right.
They're gearing up for an IPO, and their red herring prospectus, wow, it's a lot to digest.
Yeah, it's a bit of a beast.
It is. But that's why we're here. We'll break it down, get into their business model, how their financials look, and really understand how they're positioned for growth.
Good plan. Indo Farm, though, they've been around for a while, right?
Yeah, they have.
Since back in 1994.
So they've got experience.
Yeah, they've been building a pretty solid base as a manufacturer. Tractors, those pick and carry cranes you see everywhere now.
Especially in construction sites, those cranes are just, like, everywhere.
Oh, yeah, absolutely. But they're not a one-trick pony.
Okay, so what else is powering their revenue streams?
Well, their main thing is tractors and cranes,
Makes sense.
but they also manufacture engines,
Oh, wow.
harvester combines, and rotavators.
So they really do have, like, a diverse product lineup.
Yeah, but the core revenue, that's tractors and cranes.
Gotcha. And are they mainly selling domestically, or are they branching out internationally as well?
Both, actually. They've got a strategy, see,
Okay, I like it.
to cater to a wide range of customer needs, domestically and internationally.
So smart, spreading the risk, going global.
Exactly. Now let's talk tractors. Their range is impressive,
Okay, lay it on me.
from 16 to 110 horsepower.
Oh, that's a big range.
Covers a huge chunk of the global market,
Yeah. They're not limiting themselves.
Absolutely not. It's a smart move. Allows them to tap into diverse markets, not rely on just one region.
It's like they're casting this wide net.
Perfect analogy.
And are they finding success in these international ventures?
Big time, especially their 4WD tractors, the 65 to 110 HP models. Those are mainly for exports.
Interesting. Where are they shipping those off to?
Africa, Latin America, Southeast Asia, those are the big ones. They even have a 26 HP model made just for Europe.
Wow, they really are thinking globally.
Oh, absolutely. Now, cranes, they've got a good thing going there, too.
Okay, tell me about it.
They're selling their pick and carry cranes through direct sales, dealer networks, and you know what else?
What?
Government tenders.
Wow, so they're hitting all angles.
Exactly. It's a flexible approach. Shows they understand how to reach different buyers.
That's key.
Oh, absolutely. You need to speak the customer's language, you
Yeah,
know?
Totally. Okay, so their business model seems pretty diversified, strategically sound.
That's the impression I'm getting, too.
But let's get down to brass tacks, the numbers. What's the story their financials are telling us?
Well, they show steady growth,
That's always good to hear.
especially in tractor and crane sales, and not just domestically, across their export markets, too.
Double good.
Their profit before tax, up 7.39%
Wow, not bad at all.
from fiscal year 2023 to 2024. Pretty healthy increase.
So what's the secret sauce? What's fueling this growth and profitability?
Definitely increased sales, but their prospectus, it emphasizes efficient cost management.
Efficient cost management. Sounds good on paper. But how sustainable is that in the long run? Raw material prices, they're all over the place these days.
That's the million-dollar question.
Exactly. What about their debt levels? Are they borrowing a lot to keep this growth engine running?
They do have some debt, yeah. $957.30 million as of June 30, 2024.
Okay, so not an insignificant amount?
Not alarming, but definitely something to keep an eye on.
Right, it's always a balancing act. Using debt strategically can be smart, but you got to manage it carefully.
Agreed. Their debt-to-equity ratio is 0.61, so, they're using borrowed funds for operations.
This is a common strategy, but yeah, got to be cautious. What about their profit margins? Are they making a decent profit on each sale?
Their EBITDA margin is 12.06%,
Okay,
and their gross margin, 25.50%.
not bad at all.
Solid margins means they're managing costs well, making a healthy profit.
But like always, got to dig deeper, right? Look beyond the surface.
Absolutely. You got to understand what's really driving those numbers. It's not just about the headlines.
Exactly. The nuances are important. Now, let's zoom out for a sec. Big picture time. Where does Indo stand in terms of market share, in the agriculture and construction equipment world?
Well, in the Indian tractor market, they've got some tough competition. Their market share is pretty small, 0.40%.
Oh, so they're a smaller player there.
Yeah, compared to the big guys like
Right.
Mahindra and Sonalika.
Those are some heavy hitters for sure.
No kidding. But the crane market, that's where things get interesting.
Ooh, tell me more.
That market is projected to boom in the next few years. And Indo they seem ready to ride that wave.
Sounds like they're making a strategic bet.
They are. And speaking of strategic bets, let's talk IPO. Why are they going public?
Yeah. What are they hoping to achieve?
Well, the main thing is raising capital. Two key areas they're focusing on.
Okay, what are they?
First, a brand new manufacturing unit to expand their pick and carry crane production. Smart, right?
Aligns perfectly with their focus on that crane market growth we talked about.
Exactly. And the second area, they need to pay off the remaining lease amount for land they've acquired for this expansion project.
Makes sense. Secure the land, build the facility, and boom, they're ready to meet that growing demand.
It's a solid plan.
What's the scale of this IPO? How much are they aiming to raise?
Well, the IPO is a fresh issue of 8,600,000 equity shares, plus an offer for sale of 3,500,000 equity shares by the promoter selling shareholder.
Okay, got it.
They also did a pre-IPO placement, raised $351.50 million by placing 1,900,000 equity shares at $185 per share.
Okay, so we're starting to get a sense of their valuation. What about their long-term game plan, their growth strategy? What are they thinking beyond this IPO?
Oh, they've got a multifaceted approach. Expansion is key, especially in the crane market.
Makes sense they're doubling down on what they see as a winning bet.
Right, but they're not putting all their eggs in one basket. Product diversification is another big one. Developing tractors tailored to specific regions, international needs.
So smart, catering to a wider customer base. It's like they're hedging their bets.
Exactly. And geographically, they're targeting new markets, especially SAARC countries, for their crane exports.
Expansion into new markets, classic growth strategy, but it sounds like they're going at it aggressively.
That's the vibe I get, yeah. Ambitious, financially savvy, and they're positioning themselves for the future.
It's a compelling story so far.
For sure, but there's always another side to the coin. Every business has risks.
Of course.
How well IndoFarm navigates those potential challenges, that's what will determine their ultimate success.
Right, and that's what we're going to dig into next.
Buckle up.
We're going to unpack all the risks they face, their reliance on the agricultural sector, the competition, everything.
It's going to be good.
It is. Stick with us.
We'll be right back.
After a short break.
One of the biggest risks for IndoFarm got to be their reliance on rural demand.
Yeah, that's a good point.
A huge chunk of their revenue, it comes from tractor sales, and those are tied, directly to how well the agriculture sector is doing.
Right. And agriculture, it's always at the mercy of things you can't control, like what if the monsoon season is bad? Or commodity prices suddenly tank?
Exactly. If farmer incomes take a hit, they're not going to be buying as many tractors.
It's like the classic all your eggs in one basket scenario.
Totally.
Even if they're trying to diversify, that dependence on a healthy rural economy, it's a big risk factor.
Can't ignore it.
Absolutely not. And what about raw material costs? I feel like that's a headache for every industry these days.
Oh, tell me about it. Steel, for them, that's a major component. And the global market, it's a roller coaster ride for steel prices.
So how are they navigating that? Supply chain disruptions, price fluctuations, it's like a constant battle.
Yeah, their prospectus, it mentions they try to pass those increased costs onto customers.
But that's got to be tricky, right?
Oh, for sure. You can't just jack up prices without thinking about demand and what your competitors are doing.
It's a delicate balance.
It is. You want to stay profitable, but you got to stay competitive too.
Exactly. It's a tightrope walk. And speaking of competition, IndoFarm's got some serious rivals.
Oh, yeah. They're not playing in a kiddie pool.
Like we mentioned before, Mahindra and Mahindra, Sonalika, those are giants in the tractor space.
Yeah.
And IndoFarm's market share is, well, tiny compared to them.
So the question is, how do they plan to compete with these guys? They've got way more resources, brand recognition, the whole 9 yards.
Yeah, it's a David versus Goliath situation almost.
Almost. But their strategy seems to be a mix of things.
I guess like what?
Product differentiation, they're really trying to target their marketing, and they're pushing hard into new markets, that expansion we talked about.
Multi-pronged approach. I like it.
Gotta be agile.
Are they making any specific investments to, really sharpen their competitive edge?
They are. R&D is a big one, investing in research and development.
So they're innovating.
Trying to, yeah. Creating tractors that are, really tailored to specific needs, different regions, international markets.
It's like they're saying, we might not be the biggest, but we can be the best at what we do for those specific customers.
Exactly. Plus, they're expanding their dealer network, and they're putting money into marketing, boosting brand awareness.
To get the word out.
Got to reach new customers, build those relationships with the ones they already have.
For sure. Okay, so they're aware of the competition. They're taking steps to, face it head on. But what about the legal stuff? The rules and regulations, manufacturing, finance, that's all heavily regulated.
Oh, yeah, for sure.
Any red flags there? Anything potential investors should be aware of?
Well, there are a few legal disputes they mention.
Oh.
There's this pending case with the National Company Law Tribunal, involves a creditor who says Indofarm owes them close to $7 million.
Okay, break that down for me. What's the issue?
It's about payments under the Micro, Small, and Medium Enterprises Development Act.
Okay.
This creditor, they're claiming Indofarm's not paying up, and they're also saying the pricing on some transactions was off.
So payment terms and pricing disputes. That's a messy combo.
It is. The question is, how big of a deal is this for Indofarm? Could it really hurt them financially or, damage their reputation?
Especially with the IPO coming up, any negative press, legal battles that could make investors nervous.
Oh, absolutely. Perception is everything,
Yeah.
Investor confidence, that's crucial during an IPO.
So true. Any whiff of trouble and people get spooked. Are there any other legal issues we should know about?
They're involved in a few other lawsuits, yeah, but the amounts are pretty small compared to their overall financials.
So, not a huge concern, but still, potential investors, they need to factor in those legal risks.
Absolutely. It's all part of due diligence,
Yeah.
weighing the potential rewards against the risks.
Like a balancing act again.
It always is. Investing is never risk-free. It's about understanding those risks, figuring out how much they could impact things, and then making a smart decision based on the information you have.
So we've covered a lot. Their business model, how their financials look, where they stand in the market, their growth strategy, even the potential pitfalls. Anything else we should consider before we wrap up this deep dive into Indofarm?
We talked about their dependence on agriculture, but they're also affected by the bigger economic picture.
What do you mean?
Things like infrastructure development, government spending, overall economic growth, all that plays a role in the demand for tractors and cranes.
Right. If the economy slows down, their sales could take a hit.
It's all connected.
Like a giant web of factors. Some they can control, some they can't.
That's business for you.
Makes it exciting, though.
Oh, absolutely. Always something new to discover, layers to peel back.
I like that. So any final thoughts as we start to wrap things up here? What should our listeners really take away from this deep dive?
Well, Indofarm, they've got potential, that's for sure. They've built a strong base, their financials look good, and they're ambitious about growth. But there are challenges, can't deny that. That reliance on agriculture, the competition in both the tractor and crane markets, all those regulations they have to navigate, it's a lot.
So like most investments, there's potential upside, but there are risks too. Got to acknowledge both.
Couldn't have said it better myself. Ultimately, the decision to invest or not, that's up to the individual listener.
We've given them the lay of the land, but it's their journey.
Yeah, like a map.
Exactly. We've pointed out the landmarks, the potential
The
pitfalls,
scenic routes.
but they get to decide which path to take. Ultimately, whether to invest in Indofarm's IPO, that's a personal choice.
It is. Speaking of choices, Indofarm, they're making some interesting ones when it comes to technology.
Oh, yeah. I noticed that too. They mentioned using AutoCAD in their R&D department
Yeah.
and SAP for their accounting.
Smart move. Shows they're embracing those digital tools.
Yeah, to boost efficiency, streamline things.
AutoCAD, that's powerful stuff. Designing, drafting, it's all in there.
And SAP, that's like the gold standard for enterprise resource planning.
It is. Helps them manage financials, inventory, all those key processes.
So they're not stuck in the past. They're using technology to stay competitive.
Absolutely. Got to keep up with the times, especially in today's business world.
Couldn't agree more. Whether it's designing better tractors or managing their money, tech plays a huge role in their growth.
No doubt. I think we've covered a lot of ground here.
We have business model, financials, growth plans, even the risks.
Anything else we should touch on before we wrap things up?
Good question. We talked about regulations a bit earlier, but maybe we should dive a little deeper.
Yeah, good point.
Manufacturing, financial services, those are heavily regulated sectors.
Oh, for sure. They've got a lot to comply with. Safety standards, environmental rules, labor laws, the list goes on.
It's a lot to keep track of.
It is, and it's always changing. They've got to be adaptable, stay ahead of the curve.
What about their non-banking financial company?
Yeah.
Any specific regulations they have to follow there?
The Reserve Bank of India, they've got these scale-based regulations for NBFCs, categorize them based on size, activities, risk level. Indofarm's subsidiary, it falls into a category with certain requirements, things like leverage ratios, liquidity risk management, provisioning for bad loans.
It's all about making sure the financial system is stable, protecting investors.
Exactly, and they have to comply with auditor reporting rules, corporate governance standards, all those regulations in the Companies Act of 2013. It's a lot.
Navigating that regulatory maze, that's a challenge for any company, especially one that's trying to grow and expand.
It is. It's like a game where the rules keep changing.
Right, but if they can handle those regulatory hurdles, that's a good sign, right?
Definitely. Shows they're competent, stable.
Investors like to see that. Okay, so as we wrap up this deep dive into Indo Farm Equipment Limited, any final thoughts? What should our listeners really remember?
Well, I'd say Indofarm, they've got potential, for sure.
Hmm.
Strong foundation, good financials, ambitious growth strategy. There's always a but, right?
Always.
They do face some serious challenges. Can't sugarcoat that.
Yeah, the dependence on agriculture, the tough competition, that complex regulatory landscape, all things to keep in mind.
Exactly. Like with any investment, there's potential reward, but there's risk, too. Gotta weigh both sides.
It's about making an informed decision.
Absolutely. We've given you the information, the insights, the questions to ask. Now it's up to you to do your own research, dig a little deeper, make the choice that's right for you.
Couldn't have said it better myself. Informed decision-making, that's what we're all about here on the Deep Dive. So keep exploring, keep asking questions, and most importantly, make those choices that align with your goals.
That's all from us for today. See you next time.